Hey there. Welcome to our channel. Today, we're going to talk about index funds, what they are, how they work, and why they might be a great investment option for young people like you. So, what is an index fund? Think of the stock market as a giant garden with lots of different plants growing in it. Each plant represents a different company. Some plants grow tall and strong, while others might wilt or die. Now, instead of trying to pick which individual plant will do well or poorly, an index fund allows you to invest in the whole garden. You're essentially buying a share in the entire garden, and as the garden grows, so does the value of your share. By investing in an index fund, you're not relying on the success of just one or two plants, you're investing in the overall health and growth of the entire garden. And just like a garden, the stock market will have ups and downs, but over time, it tends to grow and flourish. Here's how it works. Let's say you invest in an S&P 500 index fund. This fund would invest in all 500 of the companies that make up the S&P 500 index, in proportion to their market capitalization. This means that if a company makes up 3% of the S&P 500 index, the fund would invest 3% of its assets in that company. Now, you might be thinking, why not just pick individual stocks myself? Well, the reality is that it's incredibly difficult to consistently beat the market and pick winning stocks. Even professional investors struggle to do so. That's where index funds come in. By investing in a diversified portfolio of stocks, you're essentially spreading your risk out across the market as a whole. This means that you're less exposed to the risk of any one company performing poorly, and more likely to achieve long-term growth. Another great thing about index funds is that they tend to have lower fees than actively managed mutual funds. This is because they don't require the same level of research and management as individual stock picking. So, you get to keep more of your investment returns. But, you might be wondering, what if the market crashes? Won't I lose all my money? While it's true that index funds can go down in value, it's important to remember that the stock market tends to trend upwards over the long term. This means that if you're investing for the long haul, say, 10 years or more, you're likely to see positive returns over time. Of course, no investment is without risk, and you should always consult a financial advisor before making any investment decisions. So, in summary, index funds are a great option for young people who are looking for a low-cost, diversified investment option that can help them achieve long-term growth. By investing in an index fund, you're essentially investing in the overall performance of the market as a whole, rather than trying to pick individual stocks yourself. Thanks for tuning in today. Don't forget to subscribe to our channel for more financial tips and tricks. See you next time.